Buddy, what's going on? So, as promised, I just wanted to jump on here real quick and put something quick together for you. I appreciate that you said just kind of keep it short and sweet. So good. Just a little background, just so you know. I think both of us are on the same time frame or time zone. I think, if memory serves me well, I thought you said you were East Coast somewhere in Florida. I'm in Maryland, so both of us are East Coast U.S. That's great. So a little background again. I particularly only trade during mixed, as meaning 8 a.m. until you know around noonish. I usually am done. That's my trading window, and yeah, so that's basically what I do. So just to give you a basic overview of my strat, my system, whatever you want to call it, and how I get it set up. I do run a dual monitor. So I have two monitors. First monitor, I have TradingView on, and then my monitor sitting right next to this one is my MT4, which is where I place my actual trades on MT4. So TradingView, what I've got basically, I run a split screen. So on the main window, this box over here on the left, this is the 5 minute, which is my entry time frame. And then I run a split screen. I have the 15 minute on the side here, which I keep an eye on. Then what I do, I hope you can see these tabs, just in another window on my main chart, main terminal, monitor, I have another chart open, and this is strictly just for the 1 hour. So I have the 1 hour on, and then I'm always looking here at the lower time frame. So I always enter on the 5 minute. I don't drop down to the 1 minute. I don't look at, taking trades on the 15 minute, none of that. So I basically consider myself to be a scalper. What I mean by that is I want to get in, I want to get out, have a nice day, and go about my life. So yeah, that's my whole theory and how I actually trade. As far as what I use, I'll just give you a quick rundown. So on my main window, I have two basic indicators, well, three to be total. The first one, we'll take a look, is obviously Stairmaster. All my settings are based on Christie, the way that you're going to find in the back testing, so on and so forth. I do set the MA length to 75. I like smooth. You can put it anything that you like, but for me, I just like smooth. Everything else is pretty much the same, pretty much stock, or uh, generic, whatever you want to call it, by default. But one change I do make is stair sensitivity. I drop that all the way down to 1. Reason being, again, I'm a scalper, so I want these Stairmaster prints, sneakers, if you will, to fire off as quickly as possible. I do uncheck everything else. I could care less. The only things that are important to me are the basic settings. I do allow signal repainting, very important. And then I set my sensitivity to 1. Okay, so yeah, there's that. I'll just kind of scroll through it if you want, watch the replay. I'm assuming you already have all of that, so there you go. I do use 3mm, 3 smooth moving averages. You can get that right on TradingView if you have the free version of TradingView. Use the 3 SMMA on TradingView because it counts as just one indicator. But basically, as far as the settings, I use the 8, 18, and 144. So 144 is the white line. I use that for directional bias. I have the 18, which is the green line, and then the 8, which is the yellow line. Excuse me. So for me, again, Price obviously needs to be above the 144 for longs, below for shorts. And then the only purpose I use for these, the 8 and the 18, is strictly for stop loss placement. That's how I use, what I use to determine where to place my stop loss. For most cases, I'll get into that in a little bit. But anyhow, that's basically what I use on the main chart. Next chart below, or the next window, whatever you call it, below. This is made by, I'm sorry. And then back to the main window. The other one I have on here is, it's by Lux Algo. It's called Price Action Concepts. It is a paid indicator. Yeah, it is what it is, but I like it. If you want to use something like this, I would recommend, they have a free version available. It doesn't have all the bells and whistles, but you don't really need all of that to use this type of strategy. So just basically go to indicators, go to your technicals, and then search Lux, L-U-X, and you can see they've got, Christ, hundreds of them. By Lux Algo. So the one that you want to use is called Smart Money Concepts. It's basically the free version of Price Action Concepts, minus a couple of perks. But for the most part, it's basically this indicator right here. That is a free version. Try that first. If you like it and it makes sense to you and you want to get some of the extra bells and whistles, then Lux Algo Price Action Concepts. I did the yearly. I think it's like $1,000 a year. It is pricey, but regardless, to me, it's worth it. And yeah, I'm sticking to it. Anywho, next one down, we have the Lux Algo Oscillators Premium. And again, this is a paid indicator. It is their version of the stochastic RSI. Okay, so if you are using the stochastic, that's perfectly fine. The principle is the same. Anytime you get a cross, right, now you're it's going one direction. When it crosses again, you're going the other direction, so on and so forth. The reason I like the Lux Algo version is, if you know from using the stock version, it only is going to go to the premiums. It's only going to go so high and so low, depending on where you have your settings. Most of it is 80 and 20. That's as far as it's going to go, right? And once it gets above that, all you get is a flat line on your stochastic, where the premium Lux version is dynamic. So you can see here's the extreme, and then boop, it popped up to here, then it dropped down to here, so on and so forth, and same thing here, and it dropped down. So you get a better representation of the actual momentum beyond the 80 and the 20, right? So that's why I like it. And then these areas here, these shaded areas, this represents overbought and oversold. I totally 100% disregard that. And if you are using the standard version, you know that there's no such thing as, you shouldn't use it as overbought and oversold. And we can get into a little bit more on that later, but for the most part, this is what I like to use. But it represents momentum. And then lastly, I have a volume piece. This one is the Wada Atar Explosion. It is free. You can get your own right on TradingView if you like it. Want to use it, that's fine. I like this particular indicator, volume indicator, because it not only shows volume, but it tries to identify, in theory, the difference between buyer volume and then seller volume. So you can change the colors, anything that you want. So for me, blue is buy and white is sell. So then you have this white line here, which they call the explosion line. This is to simulate momentum, same way that the stochastic would. But the theory being, when the explosion line is moving up. That means that there is good momentum in the movement. Blue line here is what they call the dead zone. So dead zone, anything below the dead zone is a no-no. Don't want to enter. For me, the way I interpret this, for me, a good signal, a valid signal, I should say, is the explosion line needs to be above the dead zone, and then price, the volume, the volume needs to be above the explosion line. So all of this is good, this is no good, this is good, so on and so forth. And then all of this, because the explosion line has dipped below the dead zone, this is all dead. No trades here. So that's how I use the volume. On the main window, back to Stairmaster, if you're using the standard version, let me just show you that real quick. I turn off the fractals. I think they're just a nuisance. And I also turn off the moving average. I don't use the moving average. That's the one, the blue and pink line that you may have on your chart. I turn that off completely. What they've done is they've taken the time segmented volume indicator and merged it with the 75 MA, which is fine, but for me, I am a visual kind of guy. I want to actually see the tick volume, which is why I opt for a separate volume indicator. So I turn that one off just because I don't need it. So yeah, that's basically my setup. So what it boils down to for me is basically three parts. There's three key parts to my strategy, my theory, my system, my edge, whatever you want to call it. My setup starts with a point of interest. I need something to say, hey, dumbass, you might want to get in this trade. Some people call it a trigger, some people call it a point of interest, whatever it is, but you need something to alert you that there's a possible trade about to happen. For me, I use these zones, and this is why I have the price action concepts. I love supply and demand. I'm not really, I'll just say this regarding SMC. You can take away from it what you will. There are some parts to SMC I think are complete bogus, my opinion, but there are some things I agree with, and the one thing that I found to be most relevant are supply and demand. Some people call them resistance, support resistance, you might call them order blocks. I really don't care. For me, I like to use them as supply and demand. So Lux will automatically print those for you. The one thing that I know to be true is with the Lux Algo, just like any other indicator, it does have a tendency to lag a little bit. So I've been using this for quite some time, and my entire strategy actually began about 3 years ago. So just keep that in mind. I've fine-tuned this and tweaked it and back-tested the crap out of this. I've got so much relative data to know that, yeah, this system works. It's been tested with me countless times over the course of 3 years on many different assets, whether it be Forex or indices or commodities. I haven't really done much with crypto, but for the most part, I know it works across a lot of platforms, or a lot of assets, I should say. But for me, it boils down to three things. Like I said, you need an entry, you need momentum, and you need volume. Those three things, key points, make up my strategy. Nothing else. It's cut and dry, pretty simple. That's what it boils down to. So again, I like these zones. Supply in red, or these are extremes, okay? You have your high, your lower low, your higher high. These are the extremes, and then the shaded ones are the internals, okay? So the light gray, that's a demand. Dark gray, that's your supply. So just to kind of give you a rundown on how I would go through my day, each session I start out on the 1 hour. So if you look here, you can see since, what day is this? The 19th of May. So like the last 2 weeks, this is DAX, by the way. It's been in this nice little downtrend for quite some time. You can clearly see that. I'm sure you're smart enough to see that. But right here, it reached a low, and then it kind of bounced back. We started ranging a little bit, and then it tested that low again, which, of course, gives us a double bottom, right? You could use some SMC stuff and say, okay, well, closed here. It went for a liquidity grab right here, trapping all the sellers, thinking that it's going to continue down. And it picked up liquidity, and now it's shooting itself back up. Now, again, at the start of yesterday, being Friday, yesterday being Friday, this is the candle where I would have entered the market, which I start right at 8. So technically right here is where I started, looking for trades, but I'm in the market analyzing right here. So I can see we've got a little bit of, bullish reaction to the double bottom. We've got a nice demand zone sitting right here, and we have momentum shift. We do have a cross, and now we're starting to see some bullish movement. So even though we are overall, we are bearish, currently we are now pushing higher, and I'm right off the bat, I'm thinking, time to go long, right? It hasn't been confirmed yet, and we'll talk about that in a second. But at the start of the day, I'm looking right here and thinking, hey, we got to go long. So I dropped down to my 15-minute. So 15-minute for me is where I look at my zones. That's all I use the 15-minute for, because I've already determined on the hourly that we should be looking for longs. So on the 15-minute, this is what I'm looking at. And I can probably show it to you a little bit easier if we go here, though I don't actually do this when I'm live, just for clarity. This is what I'm looking at, okay? So again, start of the session would have been right about this area, okay? So again, we don't have any confirmation yet. Why? Because we don't have a chalk, right? That's what we use. And if you're SMC, I look for a change of character. So I hope you have gotten some knowledge into SMC. If you don't, I apologize, that's fine. But change of character essentially signals a potential reversal. Break of structure signifies a potential continuation, okay? So that's how you determine that sort of thing. I'm not going to go into a whole lot of detail. I don't want to, insult your intelligence if you already know. If you don't, I apologize, so on and so forth. But just let me know if you have any questions. But just know that Lux Algo will automatically print that for you. So you don't really have to worry too much. But what I do is I look for a change of character, and now I have it confirmed. You can see we have the momentum. We've got a change of character, which happened right at, well, pretty much 8:50, almost 9 o'clock. But on that 8:45 candle, you can see we got some bullish momentum entering into the market. So again, higher time frame analysis, and then I'm looking here at the 15-minute, and I'm waiting for confirmation. Confirmation came right here at 8:45 into 8:50. So I'm following on the 5-minute, and on the 5-minute, we have this. Now, I will tell you this. If you are, like I said, I apologize. I don't know how long you have been trading. If you are relatively new, some of this may just be blowing you away and going right over your head. That's okay. Let me know if you have any questions. But you should always stick to the basics if you are relatively new. So one thing that you should be doing is adding this indicator here. It's called Consolidation Zones Live. I think you already have it. But if you put that on, you can see here's your first zone, right? And so right here at 8:45, you got a sneaker to print, right? Now, per Stairmaster rules, here's your most recent zone. You can see it didn't break out of that zone. So it's an invalid entry. And yes, I know in hindsight you could have taken it and you would have obviously would have played out. But per the rules, that was not a valid entry, which to help you prevent from getting into a false signal like this, again, you can see at that candle, you did not have momentum and your volume didn't agree. All right, so for me, not taking that, what I'm looking for is, well, you would want to look for a break out of this zone, but for me, I'm looking for a break of structure because we already have a confirmed change of character on the 5 minute. So the next step would be a break in structure. So I'm looking for this higher high printed right here to be broken, which it did, even though it looked like it wicked above it here, but then it snapped back and closed below. This a red box around the wick, that's Lux Algo's version of a liquidity grab. In other words, price came up, took out some of this liquidity, and normally when that happens, you're going to see, some downward momentum. So at this point, I'm looking at the market and thinking, well, maybe not. We might not have a nice run that we were thinking, at least not on the 5 minute. However, the saving grace for me was on the higher time frame, on the 15 minute. You can see we still have a shit ton of bullish momentum. So I just waited. And next candle, boom. Let me actually open this up a little bit. You might be able to see it a little better. All right, so, and then right here we get a nice bullish engulfer, right? Took out or engulfed this entire body here. Great momentum, and now we have our break of structure. So for me, I'm looking, we got the cross that we need in terms of momentum. We've got volume that is aggressive and valid, right? The explosion line's above the dead zone. Volume is above the explosion line. On the 15 minute, we are green, so we have a go there, and so that became my entry candle. If you're just using Stairmaster and you're looking for this, you got a signal print, it's still, even though you wouldn't enter on that particular candle because it didn't break the zone, you have to have some sort of rule saying how many candles, do you allow it to go before it becomes, no longer valid. So in this case, it finally broke. It broke 2 candles later, which in my book, that's fine. But regardless, if you were looking strictly for an entry based on Stairmaster, this still would have been within the rules because it was only 2 candles from that sneaker print. All right. So regardless, that became my entry. Now, as far as my actual entries, what I do, my stop loss, as mentioned before, usually I'll put it right to where the moving average is, just below it. And then I always go for a 1.5 reward, risk reward. That's just how I trade. Again, I'm a scalper. I want to get in. I want to get out. Thank you very much. Have a nice day, right? So boom, there you go. And I got my win. But what I do is I'm going to follow along. And so this might be a little bit above your head, or you may not, have a lot of experience with that. Again, that's okay. But I also look at what's called fractal zones, okay? So in this case, we can see prices moving higher. And I know it's kind of hard because it's going to, all the shit's going to come on when I'm showing it to you. But on this candle here, you can see the wick, and then the next candle, that wick broke the high of that wick. Does that make sense? Same thing here. So you can see with each successive candle, it's made higher highs, right? Now, we get our first bearish candle, okay? So it came down, and next candle was bearish again. And to be perfectly honest with you, I started to get a little antsy right here. I'm thinking, okay, so we've got 2 bearish candles in a row. Maybe price is going to start to retrace and maybe, reject off the moving average, whatever. Could be, but, it is what it is. And the other thing I'll point out, I do use a break even. So for me, 1.5 is typically my take profit, but I will set a break even point of 80% of that. So in this case, it's 1.2%. Once it gets to 1.2, I automatically have another EA, but you can manually do it. But regardless, once it gets to 1.2, I move my stop loss to slightly in profit, so it's somewhere right around here. So at this point, I was already at break even. And once that happens, I'm like, I care less what happens. Break even is good for me. But at any rate, so as price is moving, you can see this candle right here with the big wick and then the rejection and close bearish. That bottom wick did not break below the preceding wick, right? So now we have a fractal. So the way I place it, this is now a demand zone from the, I know it's hard for you to see, but from the open of that candle to the close of that wick, that's now your demand zone. So the next candle broke higher, and I relaxed. I was like, oh, good, okay. And then obviously I won. Now at this point, what I do is analyze the market. Okay, before this candle closes, I'm looking again. So I still have a nice, engulfing bullish candle that engulfed the previous candle. Still have momentum because we're right about here. Still have a lot of momentum. I still have good momentum on the 5-minute, and I still have volume. So I immediately re-entered. This time I put my stop loss right below the swing low, which is like right about here of the fractal, and got another win. Same thing again. So at this point right here, I again looked at where price was, and we now see this huge nice uptick in volume, as well as a nice momentum push on the explosion, and again green on the higher time frame on the 15-minute. So that was enough for me. Boom, I entered again. This time though, I didn't go with the moving average because I had an imbalance right here. Again, SMC crap, but the only thing I like imbalances for is it's a good place to put your stop loss. So I just put it to the lower one. I was content with that. It was pretty close to the moving average, but at any rate, this is where I decided to put it, and momentum took over, and away it went. Then it's just really just riding the momentum. As long as everything is green, right, with the trend, I'm staying in it. So that's pretty much how I trade. It's a little more complicated, obviously, but I mean, the more you use it, the more it becomes second nature to you. So, to me, I don't use consolidation zones live at all. I don't, have it on. I just prefer not to use it because I rely more on actual price action and market structure to help determine, in conjunction with the zones, how they break, whether it be supply or demand. If it's demand, then as long as everything coincides and it agrees on the higher time frame, then I'm going long. If it's demand, like we have up here, head price come up, as long as I see this and I've got volume, then I'm heading down. But this was invalid, obviously, because here's your supply up here. So that's pretty much how I do it. If you have any questions, I'm here. I'm always in Stairmaster chat during my session. Just reach out if there's anything else you want to know. Pretty straightforward. Okay, buddy, that's all I got for now. Again, have a good rest of your weekend, and let me know what you think. All right, peace out.